Yo, what's going on, everyone? Today I have something different for you guys. I actually have a live trade walkthrough on today's price action, February 2nd, 2026, I'm pretty sure. This is New York AM session. Um, so yeah, let's get straight into it because I have to re-record. I had to re-record this, so this is kind of annoying. Anyways, you can see we're beneath both midnight and 8:30. Um, Usually that would mean, oh my God, you always talk about we're in a discount, Why are you, trying to go short? I'll get to that actually, because the first trade I actually did take was a long. And this ended up being a loss. Spoiler alert. Sorry for the spoil. Today was just a huge sell off, like straight off open. And like you could rewind and go back. Like you could see at the beginning of the video, there was a 1 hour fair value gap. There's a 4 hour fair value gap. Yeah, a 1 hour fair value gap, and then there's two 4 hour fair value gaps. So my idea was that if we just went down into any of them, I would just simply long whatever, like the first IVG out to them, and make bank. That is called pattern trading, people. Anyways, you can see me measuring my stop loss here. I entered with 7 contracts. MNQ is $2 per point, so 7 times 2 is 14. You can see if you rewind the video, I was risking about $600, I think, which is more than 1%, which I don't want to do, which is why I trailed my stops so aggressively. So at this point, I'm risking about $200, um, which is good, which is better. That's a little under 0.5%. You can see I'm framing my partials here. I have another monitor set up. So, well, not another, as in another layout. Sorry, not monitor. I don't have another monitor. Um, my first TP was a unfilled 5 minute gap. That is Blake's model, aka PB Blake. That's Blake's model. IFVG targeting an unfilled gap. And yeah, so my first TP was the low of the first gap. You can see I have a sell limit set for 3. And then my last CP, which was 4 contracts, was for EQ of the range. So if you take your fib and you go from the low to the high, you get that. Anyways, next clip. So my idea is that since my long failed, the draw liquidity is clearly lower, because if we were bullish, that retracement wouldn't be so deep and we reclaim that fair value gap actually. Yeah, so the retracement wouldn't be so deep. So I'm treating this as a continuation, I'm treating this now as a bearish continuation instead of a bullish reversal. So you can see we have an IFVG, that's a bullish reversal signature. You can see me checking Forex Factor as well. So yeah, that is a bullish, that's a sign of a bullish reversal, and you can see me stopped out there. Getting stopped out honestly didn't face me at all, because I was confident now that the draw was lower, because we're dumping basically the entire day. You can see me going up a few time frames just to check. You can see that same 4 hour fair value gap. You see the H4 BC, that's a buy hour 4 buy side imbalance, sell side efficiency. And at this point, I'm looking at draws lower. I see that we have a new week opening gap that was left not unfilled, but I could use that as a draw. You can see it was used as resistance to carry us higher. You can see that bullish candles close straight above it, and now I want to use it as support. So I want to see us trade down into that maybe, since clearly the draw isn't higher for this morning. And yeah, so you can see I have buy side marked out. That would have been my target for the day. You also have 8:30 at midnight. So you may be wondering, that's what I was talking about at the beginning of the video. Why you always say we're so discounted when we're below. Why are you longing? Or why are you not longing, sorry? And the answer is context. You can see that we're selling off, selling off, selling off, right? The first signs of bullish reversal we get, we don't do anything with it. We just displace right back through it, which is pretty bearish in my eyes. So clearly the market's unwilling to go higher, and indeed we're going lower. You can see me here. I'm imagining my partials. You can see with my mouse, like the way I'm moving my mouse, I'm trying to frame my partials. I wanted to take one off at the high of the new opening gap, one off at the upper quadrant, which is 0.75 of it, and then one at midpoint, which is the dotted line in the middle. So you can see here, I was outlining, I'm gonna do it in a sec. I was outlining if we had gone displacement through 0.5 of that bearish wick on the left, yeah, right there. which is 733.5. If we got displacement through that, I would front run the CSD. Usually, if I'm confident in the draw, I don't wait for candle closures. I just, yeah, you can see right there. I just front run it. Front running meaning originally you'd wait for a close below and then you take your entry, but because I was so confident in the draw being lower, I decided to just front run it. You can see we got really good displacement, going break even already. Um, we're below the low, so this could either form as a breaker where we sweep the low and go back up, or we just displace through it. So I wanted to be safe, and I just played it safe and decided to go break even early. If I got stopped out such a period, I just come back tomorrow and make more. Anyway, so basically displacement off of it. You can see the candle closes in 22 seconds. It's a 2-minute chart. Um, so yeah, beautiful displacement through. Yeah, you can see me with my partials now. I'm taking off 4 at the high, 2 at the upper quadrant, and 1 at the midpoint. You're gonna see me play around with that. I didn't actually originally keep that. So yeah. Anyways, still on a 2-minute chart, watching the movements, you can see you can see the same wick. I want to see that used as resistance to take us lower. Wicks are gaps, remember that. Um, and yeah. So we're trading up about $800, $700 now. I moved my stop again just to cover commissions and fees. I take a partial there as per my strategy. Truth be told, didn't really want to take off a partial, but usually what I do is at EQ of the range, I take my target and then I take a protected swing. In that case, a protected swing would be the high that comes in at about 25,800. That high right there is protected because it's an order block. It resulted in an order block. You can see we failed to trade up. I started breaking down, then we got an order block. So I'm treating that as a protected swing. Um, yeah, I draw my fib from that and I take a partial at 50% of the range. That's just to walk away with something small. It doesn't really matter. So either I get stopped out and walk away with like a $50 day, or yeah, you can see me trading my stop more. I'm treating that first fair value gap. I'm on a 1-minute chart now. I'm treating that first fair value gap as a breakaway gap, and the second one as a measuring gap. Um, Measuring gap just to read order flow. If we really are bearish, if we do retrace into that, I want to see immediate displacement out. And if we inverse that, it's kind of like a condition. If we inverse it, I'm thinking, okay, it may be time to get out this trade. So you can see me playing off with my partial now. Sorry if I'm all over the place. I'm recording this for the second time. So yeah, up about $1,000 at this point, or 945 technically. Yeah, you can see I'm deciding to take almost a full pull basically at the high because of consistency. I'm now realizing I might go over the consistency rule because I didn't expect this trade to run so far. You can see me being very aggressive with my stop, locking in about $600 to $700 there, not 6 7. So you can wrap about $1,000 now, with 6 contracts, and I'm getting my trigger finger ready because I just saw that the S&P is actually way lower at this point in time. So I'm waiting. Um, and I should be all out right there. Yep, all out there for a simple day. Beautiful trading day. I'm gonna show the proof in a moment. You can see Fund Next, my challenge account, and yeah, up at 1500 right there. Taking the screenshot, and yeah, it's as easy as that. Thank you for watching, and I'll see you tomorrow.